Hello, dear friends of real estate investment trusts. If you had believed us, you have followed us, you attended our classes, you noticed that you have nailed it for this year. The S-REITs market is up 18%, one of the strongest in the last 2 months, particularly in this month alone. And we are looking forward to 2024 with great optimism. For those who have followed us, you notice that essentially we are always preempting you, and we preempt you the bottom on 26th of October that we saw. And within these 2 months alone, REITs basically have just gone on a lambastic trail of fantastic returns. Now, in this video, I'm going to talk essentially about three factors why next year, 2024, we are heading higher. Join on the rail, ladies and gentlemen. First, ladies and gentlemen, this chart shows you the DPU yield of the various REITs, the major REITs, as of ended the year 2023. You notice that essentially the DPU yield of the various REITs from Capital Land ICT, Capital Land Ascendas REIT ranges from 5.165, 5.163 to the height of Capital Land China Trust. That's basically 7.677. You look at the next table, ladies and gentlemen. This table of 22 REITs, the high in this table on the DPU yield is 11.129%. That's coming from United Hampshire. The more interesting ones are like 7.438%. That's Ames REIT. Now, you notice, ladies and gentlemen, this REITs table comprises 22 REITs. There are 38 REITs in the market right now. You notice we have purposely excluded, the outliers, so to speak, those that we term as toxic REITs in our last video, where we told you that, look, investing in REITs is simple. Keep it simple because you are there to earn one, income, two, capital gain, and three, forex gain. Right? If these REITs that cause you mental anguish as they have done so, the likes of Manulife, the likes of Prime REIT, the likes of Elite Commercial REIT, then they should just be thrown out of the window. So anyway, for further details, look at our last video. So essentially, if you actually pull the average of the DPU yield of this 22 REITs, you notice that currently S-REIT's DPU yield is 6.307%. And just looking at Friday's Singapore 10-year bond yield is 2.713%. You notice our yield spread now is very healthy. That's 3.594% or roughly 3.6%. Now, generally, REITs trade between 3.2% to 3.8% average. So this means that there is greater room for compression of yield. Now, greater compression of yield means greater upside on REITs. So that's one key reason, ladies and gentlemen, to be holding REITs going into 2024. And that's also one reason why we think that REITs are headed higher for 2024. Of course, there will be chances where there will be profit taking. But if you want to know when, then do follow us closely in our weekly videos, or even better still, attend our classes because our classes we drill into the specifics on the timing as well as actually the good and the bad REITs that you should and should not have in your portfolio. Now, ladies and gentlemen, look further. This is actually the bond chart. Now look at the thing that is actually highlighted in the red rectangle. Now it reads Singapore 10-year bond, government bond reached a maximum yield of 3.6% as of October last year. And of course, you can see that this October, it tested the high of 3.6%. But where are we now at the 10-year bond? We are at 2.7%. And look, essentially, ladies and gentlemen, when the 10-year bond yield fell from 3.6% is of October this year down to currently 2.7%. That's a 90 basis points drop. You can see that REIT markets basically just went bombastic. Now, what happens, ladies and gentlemen, if we see the second arrow, that is actually yield falling down to 2%. After all, the Fed minutes already say that 3 interest rates cut. But traders in the market, if you look at what traders are thinking, they are looking for 6 interest rates cut. Assuming a 0.25%, you're looking at in total cumulative 1.5% interest rates cut for next year. Now, which is which? Well, we will track it closely for you when the time comes. More importantly is that if the yield therefore drops as the second arrow enumerated, then essentially, REITs basically have a further greater upside for 2024. Again, this is our opinion. It is actually not investment advice. So, but guess what? Most of the time we have been right. So, well, thank you for listening and watching us. Okay, but do make your own decision. Again, this is not investment advice. But for those of you who are even more optimistic, you ask, is there a possibility that the yield will go back down to the third arrow as what just mentioned? That is down to 1%, where zero interest rates regime was the case. Now, in my opinion, I don't think we will go back to the 17 years where interest rates were at close to 0% in the last 2 decades. I think a more normalized rate will be at a 1% level, So, but anyway, irrespective of that, REITs will perform. Okay, so as I said in my 联合早报 interview, in the 2022, essentially one must be prepared for the worst of real estate investment trusts. And 1 year later, you notice that yes, turn around. So the essential precautions that put in place are this: one, stay off toxic REITs, as we have mentioned in our last video. For the listing of all the toxic REITs, do read them, and check our last video. And essentially, be prepared when interest rates turn, because the bulk of the rate gains are actually at the beginning when interest rates start to turn, as you have seen. So, for example, in the last, well, November, December, 2 months alone, REITs have gone up 18%, and it's basically one of the sharpest rallies in the 21-year history of the Singapore REIT market. Would you want to take a bet against it? Well, sometimes we do take a bet against it, ladies and gentlemen. In fact, in this last video of the year and beginning of this year, next year, I actually want to pay tribute to one of my good friends who actually passed away this year. He is none other than Mr. Barton Biggs, who used to be with Morgan Stanley, chief strategist. Now, this is a newspaper clipping way back, yes, ladies and gentlemen, way back when I was in institutional sales, when I was head of institutional sales at Kim Securities. That was on Tuesday, 28th October 2003, where both of us took a very different view on the market. So if anything, ladies and gentlemen, we took a different view on the Hong Kong market, and true enough, I was lucky to be correct. Of course, if you look at the picture closely, ladies and gentlemen, you'll be saying, huh, is that Gabriel Yap? Oh my goodness, he does look obese at that time. Boy, ladies and gentlemen, do I still look as young or even younger than what I was 20 years ago? Well, but maybe because if you have been making money on real estate investment trusts, you can always look young every other day. Well, do join us, ladies and gentlemen. But I just want to pay tribute to one of my good friends, that's Mr. Barton, because after this particular episode, we became really good friends, even though we have different views. So it's okay, ladies and gentlemen, to have friends. In fact, you should be searching out friends with alternative, fundamentally grounded views. And how do you prepare that? How do you prepare yourself mentally, physiologically, and psychologically? Well, do this particular exercise, because if you do this, this is actually the clapping, dancing, push-up, because if you want a perfect 10 for 2024, this is what you should be preparing to do. Do 10 of this, just 10 of this. Well, it's the end of the year, ladies and gentlemen. I just want to thank you, my full-hearted, for those who have subscribed to our videos and supported us, and know that attended our classes and know that you make good money on that. Ladies and gentlemen, as I always tell you, prepare yourself mentally, psychologically, and physiologically. So if you want 2024 to be a perfect 10, let's do ourselves a perfect 10. And I'm going to show you a dancing, clapping push-up for 10 times. I know it's difficult to even do one, but well, if you never try, you never know. 2024, here we come. Yes, ladies and gentlemen, perfect 10 for 2024. Cheers. So, ladies and gentlemen, the dancing, clapping push-up puts you in a psychological great state of mind to be well prepared for 2024. But what about the second factor? that we think will help push up REITs even further from next year. Well, take a look at this. You can see, ladies and gentlemen, this is the price NAV ratio. Now, in my book, Making Your Millions in REITs, this is the English publication. This is the Chinese publication, which is the bestseller in China, in the US, because it's published in Mandarin over there, and for the last 2 years, I've actually said that the price to NAV is a NAV or NTA is a good understanding of the valuations of REITs. Well, when REITs trade at a substantial discount, too much a discount, essentially, this is actually a good buying time because you're getting a discount buying from the market vis-a-vis the underlying assets. Now look at essentially the same comparable REITs, the 22 REITs, from Capital Land, ICT, all the way down to Star Hill Global on the first slide. The second slide, ladies and gentlemen, is actually Fraser's Logistics down, ESR REIT, Far East Hospitality Trust, down to United Hampshire. You notice that the S-REIT's price NAV right now is 0.92. It means that they are still trading at below one-time book value. Right now, you notice, ladies and gentlemen, that we have excluded the likes of Manulife because, look, in my now this is my Business Times interview last year on Manulife, and they asked me essentially in December last year, yeah, just a year ago, what should Manulife do? A year ago, Manulife, I was quoted, that Gabriel Yap, a veteran investor and chairman of investment firm GCP Global, agreed that dividends or divestment should be top of the recommendation from the strategic review of Manulife. My top recommendation is sell the worst performing assets as Manulife, its current share price is traded below NAV. It's very simple. The basic rule in REITs is investing is to make acquisitions with equity if the share price is higher than NAV. Now, if the share price is below NAV, then you just have to sell. And 1 year later, what happened? Manulife talked to Mireille. They actually engaged consultants. And then in the end, they did what they call strategic review, spending a lot of money. Whose money? Shareholders' money. And in the end, what did they recommend? They recommended exactly what I told them or told you guys 1 year ago. That is actually sell assets. And true enough, if you look at the three resolutions we will pass in the annual general meeting, it's talking about selling assets. Now, the key thing, ladies and gentlemen, in coming selling illiquid assets now, 1 year later, is that you're not going to get a very good price compared to a year ago because in 1 year, the commercial real estate in US have actually collapsed by another 20 to 25%, depending where the cities are. So can you just imagine, ladies and gentlemen, that if you tell me timing is not important, man, you are just out of sync whatsoever. So once again, coming back to this REITs, you notice that if the REITs price NAV is 0.92, when the average should be about 1 to 1.1 in the last 21 years, you notice that this is another factor supporting the upside for real estate investment market in Singapore for next year. Okay. Then moving on to the factor, ladies and gentlemen, is that you notice that since last year I've been propounding and impounding, even quoted in the press many a times that REITs basically when they are fighting higher interest rates, they should be connivance of high interest rates by not making acquisitions, no matter how uh, accretive. But anyway, these days when REITs make acquisitions, these days, to get a fantastic accretive acquisition, it's long gone, ladies and gentlemen, because who would sell you such an asset at a cheap price? Because the only way to go about doing that is to get an asset at a cheap price. Now, what the REITs have done this year is, well, you can see that the total acquisitions that average between 9 to 10 or 11 billion in the preceding 4 years have dropped down, like a stone down to 1.6 billion. Good news for shareholders. The funds raised have dropped from 4 billion down to about 2 billion. That is basically 50% off. That's good news. If you notice that some of the REITs that have done divestments, you notice that essentially like the likes of MLT, the likes of ESR, you notice that these are the ones that have made strong price gains in the last 2 months. And Not surprisingly, this is the case because exactly as what we have said in our Business Times interview in April of 2023, we mentioned a few things. One is that in the last interest rate cycle, up cycle in 2018, we see that REITs do not go down or up in one straight line. Meaning that even if the recovery comes in 2024 in a big way, don't expect it to be a straight up. There will be occasions when you need to know when the REITs are poised for a pullback, poised for a correction. And this is where you should be taking your money and running first. Now, we expect punctuated rallies to actually permeate the market, right? And being very importantly, when you go into the rally, it's important to know they're holding good REITs. And some of the good REITs are not just about the assets, it's about the quality of the sponsor, as I've mentioned. Now, as have been quoted in Business Times, it says that REITs are only as good as the sponsors that they have. Okay, so not surprisingly, the likes of CapitaLand ICT, CapitaLand Ascenders have led the rallies by up 22% in this last 2 months. The likes of Maple Tree, Industrial, have actually powered the Maple Tree rallies, in this last 2 months. Right. So now the other factor, ladies and gentlemen, is that you want to take note is this. That is the latest market expectations are becoming more and more polarizing. One is that and as a smart and sharp and savvy investor, you must be asking, are market expectation running a little bit too much ahead? Right now, for example, the first interest rate cut that traders are expecting is six interest rates, but it's supposed to begin in March. So this is actually the tool or what we call the dot plot from the latest Federal Reserve in the last minutes that was tabled. But if you look at the Federal Reserve statements, they say that they only expect three rate drops. So who is right? Well, that will then be the key causative factor for volatility for real estate investment trust in 2024. So once again, ladies and gentlemen, I just want to take a heartfelt, sincere, appreciative thanks for those who have subscribed to our channel. Tell your friends about this. If you want to know in depth about REITs on a weekly basis, subscribe to our channel. If you only want to have good REITs in your portfolio that makes you good money, as what my book says, making your millions in real estate investment trusts, then do join us, right? And even further, if you want to really make, essentially millions from REITs, then do join us for our classes. The next class is on 23rd of March. Yes, it's a long way away, but ladies and gentlemen, we are letting our profits ride because we have been once again nailed the opportune time for the turnaround in the REIT this year. We're just so happy, but we are also connivance that we don't want to let the happiness run a walk. Right? So once again, ladies and gentlemen, thank you very much and Happy New Year.